Here's a statistic that Wall Street doesn't want you to think about. 95% of traders lose money over a 2-year period. Why? Are they stupid? No. They lose because they're playing on a tilted table. They think they're investing. They aren't. They are gambling in a zero-sum game where the odds are mathematically stacked against them. If you were trying to buy low and sell high, you are the victim. You are the liquidity for the big banks. But there is a second group of people in this market, the 5%. They don't bet on the price going up. They don't bet on the price going down. They don't care about the price at all. And yet, they make money on every single hand.
If you stay until the end, I am going to teach you the casino strategy. I will show you exactly how to stop being the gambler and start being the house. Let's rig the game in your favor.
But before we enter the engine room of the casino, a warning. What we teach on this channel is not popular advice. It is financial engineering. If you are tired of generic advice and you want to know how money actually works, I invite you to subscribe right now. I am publishing these breakdowns every week to help you build your fortress.
By subscribing, you aren't just helping the channel, you are joining the minority who have decided to stop being clients of the system. Welcome to the team. Now, let's get to work.
I want you to meet Kevin. Kevin is a crypto trader, or maybe he trades Forex. It doesn't matter the market. The psychology is the same.
Kevin has 4 monitors, he drinks 3 Red Bulls a day, he subscribes to VIP signal groups on Telegram, hoping someone else will tell him how to get rich.
Kevin wakes up at 2 a.m. sweating because an alert went off on his phone. Kevin thinks he is the Wolf of Wall Street. But let's look at Kevin's mathematical reality.
Month 1. Kevin makes $5,000 on a meme coin. He feels like a god. He tells his friends he's going to quit his job.
Month 2. The market corrects. Kevin loses $4,000. He feels stressed. Month 3. Kevin tries to make it back. He does revenge trading. He loses another $3,000. Do me a favor. Be honest with me. Have you ever made an impulsive trade just to try and win back money you lost the day before? If you have, type guilty in the comments. I did it when I started. It is the #1 psychological trap. Now, back to Kevin. He is now down. But here is the invisible killer Kevin ignores. Fees.
Every time Kevin clicks buy or sell, he pays a fee. He pays the spread, he pays the gas. Even if Kevin breaks even on his trades, he loses money to the casino because of friction.
Kevin is running on a treadmill covered in broken glass. He is trading his peace of mind for a lottery ticket that never pays out. And then I realized I am sitting on the wrong side of the table.
To escape the trap, you need to understand how a casino actually works. And I'm going to use a historical analogy. Think about the California gold rush of 1849. Thousands of people traveled west hoping to find gold. Most of them died poor. Who got rich with absolute certainty? The guy selling his shovels. The guy selling the jeans. They didn't bet on finding gold. They provided the infrastructure for the seekers. A casino works the same way. When you walk into the Bellagio in Las Vegas, do you think the owner cares if red or black comes up on the roulette wheel? No! The owner doesn't gamble. The owner has a mathematical advantage called the house edge. They make money on the volume of the game, not the outcome of the game. It's called the law of large numbers. If enough people play, the house always wins mathematically. In the financial world, this is called being a market maker. Think about Coinbase. Think about Uniswap.
Think about the New York Stock Exchange. Does Coinbase care if Bitcoin goes to 100K or crashes to 10K? No. They charge a fee on every single transaction.
They get rich when people buy. Euphoria. They get rich when people sell. Panic. Volatility is their paycheck.
And for the first time in history, thanks to DeFi, you can be Coinbase. You can be the house.
So, how do we switch sides? How do we stop betting on horses and start owning the racetrack? Here is the 3-step algorithm to become the house. Step 1, the mindset shift from price to flow. The gambler, Kevin, is obsessed with price. Will it go up? The house, you, is obsessed with cash flow. How much does this pay me per month? You need to stop caring about the green and red candles. Your goal is no longer capital gains, selling higher. Your goal is yield. You aren't looking for a lottery ticket. You are looking to build a toll booth. You want to collect a toll fee from every Kevin who drives by at full speed. Quick question. Would you rather have a 1% chance to win $1 million or a 100% chance to earn $5,000 every single month?
Let me know in the comments. Lottery or rent? The wealthy always choose the rent.
Step 2. Provide the chips, staking and lending. This is level 1 of being the house. In a casino, someone needs to lend money to the players so they can keep playing. In crypto, this is called lending. You take your assets, like stablecoins or Ethereum, and you deposit them into a decentralized protocol like Aave. The traders, the Kevins, borrow your money to make risky, leveraged bets. They pay you interest for that privilege.
But wait, you ask, what if they lose my money? Here is the magic. These loans are over-collateralized. If Kevin wants to borrow $80 of yours, he has to put up $100 of his own money as collateral. If he loses, the protocol liquidates this $100 and pays you back automatically. You win either way. You are the bank. Currently, you can earn 5% to 10% doing this. It is safe, it is boring, and it is profitable. Step 3. Own the table. Liquidity pools. This is level 2. This is where the real money is. You become a liquidity provider. Imagine a currency exchange booth at the airport. People come in desperate to swap dollars for euros. The booth charges a 1% or 2% fee. You can fund that booth. You put the dollars and the euros in the safe. And every time Kevin swaps his tokens on a decentralized exchange, like Uniswap, clink,
the cash register rings. You receive a piece of that fee. In DeFi, real people are earning 15%, 30%, sometimes 50% APR just by letting people trade with their money.
You aren't betting on the direction of the market. You are facilitating the market. While Kevin sweats blood watching the 1-minute charts, you are sleeping, eating, or traveling, and your wallet is collecting micro fees 24 hours a day, 7 days a week.
Now, a vital warning. Being the house is statistically superior, but it is not risk-free. There is smart contract risk. If the casino catches fire, you lose the chips. That is why we stick to blue-chip casinos. The big ones, the established ones with billions in liquidity. We don't open a card table in a dark alley.
let me tell you how my life changed when I stopped being Kevin and started being the casino. When I was a trader, my mood was a mirror of the market.
If Bitcoin went up, I was happy and bought dinner. If Bitcoin went down, I was depressed and didn't want to talk to anyone. I was an emotional slave to a chart. Now, I wake up, I see the market crashed 10%. I see blood in the streets. And do you know what I do? I smile. Why? Because a crash means panic. And panic means everyone is selling and buying frantically. It means volume. And my liquidity pools are processing all those frantic trades.
While everyone else cries because their portfolio price dropped, my fees earned column is hitting an all-time high. I make money from their fear. I make money from their greed.
That is the ultimate position of power. That is wealth immunity. You have a choice today. You can keep sitting at the tilted table, the path of failure. You can keep trying to beat high-frequency bots, insiders, and algorithms with your laptop. You can be part of the 95% who pay the light bill in Las Vegas.
Or you can stand up, walk confidently around the table, and put on the dealer's vest.
Don't buy crypto hoping it goes up. That is hope. Hope is not a strategy. Earn crypto because the market never stops moving. Be the house.
Now, you have the machine. You know how to be the casino. But a casino needs one fundamental thing to open its doors: capital. You need a bankroll to start providing liquidity. You can't be the bank with $100. If your cash is currently tied up in liabilities, like a car payment you don't need,
Or a house that keeps you poor, or credit card debt, you can't play this game. You are stuck in the middle-class trap.
You need to free up your cash flow immediately so you can fund your casino. I broke down the 3-step exit strategy to escape the middle class and build your war chest in this video right here.
Why you are still poor. The middle class trap. Click there. Get your capital back. Open your casino. Cheers.